Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Thursday, the 28th of August. I'm Caroline Hepker in London.
And I'm Stephen Carroll. Coming up today, after a staggering 2-year AI boom, the world's most valuable company, Nvidia, forecasts a slowdown in growth.
Defence spending by NATO members is on track to hit $1.5 trillion this year as the alliance confronts growing geopolitical risks.
Plus, charging ahead. European car sales surge as motorists opt for more electric vehicles. Welcome news for an industry that's been battered by US tariffs.
Let's start with a roundup of our top stories.
The AI boom made Nvidia the world's most valuable company, but some investors are now worrying that boom could be slowing down. In its latest results, Nvidia says it expects sales to be roughly $54 billion in the 3 months to the end of October. Though that was in line with the average Wall Street estimate, some analysts had projected more than $60 billion. The tepid outlook adds to concern that the pace of investment in AI systems is unsustainable. Mandeep Singh is the global head of technology sector research at Bloomberg Intelligence.
I mean, just the guide, the 3Q expectations were 54 to 55 billion. And to my mind, this print is not something to be excited about.
And markets seem to share Mandeep Singh's view. Shares in Nvidia slipped 3.1% in post-market trading.
Now, if those losses hold when markets reopen, it would wipe roughly $140 billion off Nvidia's market capitalization. That is the equivalent of the entire value of Pfizer, highlighting the company's outsized role in driving stock gains this year. During a conference call with analysts on Wednesday, the company's leadership, though, rejected the notion that interest in deploying AI infrastructure is flagging. Nvidia's CEO Jensen Huang suggested that the, quote, opportunity ahead is still immense and that the company is still pushing to bring their most advanced AI chips to the Chinese market.
So I think the opportunity for us to bring Blackwell to the China market is a real possibility, and so we just have to keep advocating the sensibility of and the importance of American tech companies to be able to lead and win the AI race.
Nvidia CEO Jensen Huang speaking there, as the company also revealed that the Trump administration's plan to charge a 15% commission for the company's AI chip sales to China hasn't progressed beyond the early stages and could pose legal risks. The company said that it excluded as much as $5 billion in possible China sales from its projection because it can't be sure whether geopolitical tensions between the US and China will allow Nvidia to fill orders.
France's Prime Minister says he will negotiate directly with lawmakers next week in an effort to win support for a planned confidence vote on the 8th of September. Francois Bayrou warned against another snap election, saying he doesn't think it will provide any stability given the demands of the far right and the far left. Speaking to French broadcaster TF1, Bayrou called for cooperation to address what he described as a crushing debt burden.
The question is simple. My conviction is that it is impossible to continue to carry out the country's recovery policy if there is not, at minimum, agreement on the importance of this choice, because we cannot force our way through. And besides, I don't want to force our way through.
France's Prime Minister Francois Bayrou was speaking as investors are already positioning for higher risks, selling French assets following the announcement of the confidence vote on Monday. France's benchmark bond yield premium over Germany reached 82 basis points yesterday, its highest since January.
Bloomberg understands that Mexico is set to raise tariffs on imports from China after US pressure. The move aligns with President Trump's push to shield North America from cheaper imports, and approval is likely in Mexico given President Claudia Sheinbaum's coalition majority. Sources say that the hikes will target cars, textiles and plastics, among other products. Mexico has become the top global destination for Chinese vehicles, overtaking Russia earlier this year.
2 children have been killed and 17 other people hurt in Minneapolis after a gunman opened fire through the windows of a Catholic church holding a mass for elementary school pupils. FBI Director Kash Patel identified the suspect as 23-year-old Robin Westman, who police say died at the scene from a self-inflicted gunshot wound. Minneapolis Police Chief Brian O'Hara says it's an unthinkable tragedy.
This was a deliberate act of violence against innocent children and other people worshiping. The sheer cruelty and cowardice of firing into a church full of children is absolutely incomprehensible.
O'Hara says police are still looking for a motive, but the Trump-appointed FBI chief Kash Patel says the attack is being investigated as an anti-Catholic hate crime.
NATO says it's on track to spend more than $1.5 trillion on defence this year. The alliance faces an unprecedented range of challenges, including the ongoing war in Ukraine and questions over America's role in European security. Bloomberg's Freddie Fulston reports.
US President Donald Trump has been pushing for Europe to invest more in its own defence, and the latest figures show NATO has listened. All 32 members of the alliance are on track to meet their old defence spending target of 2% of GDP. And in a meeting at The Hague in June, they agreed a new goal of 5% of GDP by 2035. The spending push is being led by Germany, whose annual defence budget is expected to double to as much as $188 billion within the next 4 years. In London, I'm Freddie Fulston, Bloomberg Radio.
The UK's Chancellor Rachel Reeves reduced her upcoming budget to build a larger fiscal buffer. That's the view of Bloomberg Economics, which says the government should boost its fiscal room for manoeuvre from £10 billion to £25 billion. Bloomberg's James Woolcock has more.
All year, the Chancellor has faced questions about what taxes she's going to raise. That's because both economists and journalists can see changes to growth forecasts and spending plans. That would erode the £10 billion the government sets aside in case of emergencies. So Bloomberg Economics are one of many bodies now suggesting Rachel Reeves should set the bar higher. But doing so would mean she has to find even more money to fill the coffers. In London, James Woolcock, Bloomberg Radio.
And those are our top stories for you this morning. Looking at the markets this hour, so the all-country world index is higher, brushing off perhaps the slightly negative outlook from Nvidia, whose shares fell after market in US trading. Chinese chip shares have actually surged. You've got the CSI 300 index up overall by 0.7%, and you had the S&P 500 close at a record high on Wednesday, even if stock futures this morning are actually down about 0.1%. Eurostoxx 50 futures are higher. And we do continue to follow the most important story in bond markets, where you've seen significant moves in terms of long-dated bonds in the US, in France and the UK, maybe for some slightly different reasons, but still hugely significant. 30-year US yields this morning, though, are actually easing off, down by 2 basis points at 4.9%. Those are the markets.
In a moment, we'll discuss Nvidia's forecast, which has failed to impress investors, and why European car sales have jumped. But another story that we've been reading this morning, Caroline, I didn't do my homework after yesterday's programme, and I did not go home and watch K-pop Demon Hunter.
Oh no, I wanted you to hum all the songs. Yeah. Anyway.
Thank you for thinking that I can be off book in a day, though.
Yeah. I love it. That is a deep musical theatre reference, isn't it? Love it. Netflix's big weekend box office hit. Well, of course, Bloomberg's Jason Bailey's got a great story out about this, wrapping the knuckles of Netflix's CEO Ted Sarandos for leaving money on the table as he sees it, because he says that Netflix seems to be trying to cut off its nose to spite its face by refusing to give fans what they seem to want, which is actually to see movies in theatres, in cinemas. This is after the success of this animated movie that was weeks and weeks available actually to download on Netflix, and then finally was so popular they put it into these sing-along in-theatre performances. But Jason sort of makes the thread that that's actually a bigger issue, that cinemas and theatres, people still do want to go and sit together and watch.
But the communal experience is now the premium part of this. I mean, think about the secret cinema trend that's been so popular for many years now. This this idea of actually it being an event that you want to go and spend money on and want to go and attend. That's part of how the consumer psyche has shifted away. Perhaps it's a post-COVID thing as well. People are happy to be out of the house and enjoying entertainment in person as well. So this is a very interesting argument from Jason Berry that really Netflix is missing a trick here, and they should be leaning into the fact that they can draw audiences into a cinema as well as into their subscriber services. It's not one or the other, but you can actually do both. A great piece. You'll find it at bloomberg.com/opinion, and we'll also put a link to the article in our podcast show notes.
Now to our top story on Nvidia. Shares fell in extended New York trading after the chip maker gave a forecast for the current quarter that wasn't as bullish as some analysts had anticipated. Joining us now is Bloomberg Intelligence's senior analyst, Robert Lee. Robert, good morning. So just tell us a bit about the results for the second quarter, and looking backwards, in other words, and also why the forecast going forwards has slightly disappointed investors.
Maybe just take a very brief step back and go back to textbooks, because I think what we saw in terms of the stock price reaction was really, it was a classic setup going into the results, textbook stuff, because there was a very high level of expectation, ahead of the results. We've seen this many times with Nvidia. The stock was trading close to an all-time high. The valuation's pretty punchy. So a very high level of expectations. And if you look at the results themselves, I think they were pretty solid. But what we didn't see was any significant outperformance, either in terms of the reported numbers or, more importantly, the guidance. And so as a consequence, it's unsurprising, really, that you're going to get profit taking. But in terms of the fundamentals, I think the outlook for the company remains pretty solid. I mean, in crude terms, they're the only game in town still from a Western perspective. But as you appreciate, there are some question marks. One of them is on the level of returns that are being generated within the AI industry in general. And if you remember, I think it was a week ago, there was a very important report that came out of MIT in America based on a survey of various corporations that were employing AI internally. I think it was only around 5% of those were making a meaningful return. In other words, 95% were making next to no return or were still loss-making. So that raises big fundamental questions about the monetization outlook within the users of AI. In other words, the software companies that are utilizing these models to help develop new apps. And then the other issue is obviously the ongoing saga with the H20. And I think the most interesting new development on that front is that it appears now the debate is moving on. Jensen Huang and his CFO both mentioned the fact that they are effectively lobbying the US administration to try and persuade them to allow Nvidia to sell the high-performance Blackwell chip. So not the H20. This is a far more powerful chip, but trying to get some permission to sell that into China. I think, H20 is probably dead in the water at the moment from a Chinese perspective.
That's a really interesting point that was made during those comments as well. I mean, how should we understand this forecast in the context of the boom that Nvidia has seen over the past 2 years? Sure, it's slightly more tepid than some analysts had expected. But, I mean, in the grander context of things, this is a company that has massively benefited from investment in AI.
Yeah, I think near terms, again, there were numbers themselves. I mean, technically, the guidance was marginally above what was expected. But again, cast your mind back in certainly sort of 18 months or so ago, this company, as our American colleagues would refer to, they were beat and raised. They were substantially beating numbers and then raising guidance significantly. So we've not seen that. So again, the rate of incremental beat and raise, the cadence of that, the momentum behind that has eased significantly. Part of that's a base effect because the company is obviously significantly bigger than it was. I don't think it has any near-term fundamental consequence, but that explains the share price reaction. Yeah. And again, in terms of supply from a Western perspective, they've got the market to themselves. They've got an order book to die for. But at the end of the day, if the users of these chips, if the companies purchasing these chips are not monetizing fast enough, or they don't have the prospect to generate a meaningful return on investment from the very, very high levels of investment they're spending at the moment, then that raises a fundamental question about the whole AI cycle that we're seeing at the moment, because clearly AI is a great productivity tool, but again, it comes at a huge cost. Again, Microsoft, from memory, is going to spend around 85 billion in capex this year. But the level of monetization that even a leading player like Microsoft seeing at the moment is significantly lower than that. And whilst the rate of monetization is increasing, I would argue, or continue to argue, that the ramp in monetization is nowhere fast enough to justify such humongous levels of capex being spent. So some might argue, as I've said, there are parallels with the dot-com boom and the capex bubble that we saw at that point.
Yeah, absolutely. Let's see what people can actually deliver from all of their AI technology spend. Look, just very briefly, in terms of the complexity of the sales to China, the Trump administration wants to charge 15% commission on Nvidia's AI chip sales to China, which is a really unusual plan. The CFO did also talk about that. Just explain what he said. I mean, essentially that there needs to be a legal process for that to be possible, right? How do you see that?
Yeah, on the, I guess it's there are legal complexities there, but I think those sort of discussion is academic to some extent, because at the end of the day, if your potential end customer, Chinese AI companies, which, based on recent Bloomberg reports, it appears that the government is strongly encouraging Chinese AI companies to buy locally, then effectively there may well be no market there. And also, as a major geopolitical rival and economic rival to the US, again, why is China going to buy US products, in the full knowledge that 15% of that is going to their main rival? So I think the direction of travel from a Chinese perspective is to double down on its efforts to become self-sufficient in tech. Those efforts are accelerating and the country's making good progress. You've got the likes of Cambricon, which is an A-share listed Chinese company. If you look at the stock price, it's gone ballistic. Recently the local suppliers are clearly benefiting from this, Huawei as well. And I think on balance, the local AI companies like Alibaba, Tencent, Baidu have sufficient supply of chips on hand and are benefiting from an increasing supply of domestic chips from the likes of, as I said, Huawei, Cambricon. So net, with all these geopolitical complications, on balance, I think it's highly unlikely that Nvidia is likely to be selling meaningful level of H20 chips, or in fact probably none at all from where we see it at the moment, with a big question mark about their ability to sell Blackwell. So, it would be nice, but again, it's all tied up with a lot of geopolitical noise and complexity at the moment.
Okay, Robert Lee, Bloomberg Intelligence Senior Analyst, thank you very much for joining us. Stay with us, more from Bloomberg Daybreak Europe coming up after this.
European car sales rose the most in 15 months in July, in a boost to the industry, which has been battered by President Trump's auto tariffs. Joining us this morning is Bloomberg's transport reporter Danny Lee. Danny, good to have you on the programme. So a big jump in sales. What are Europeans buying then?
Despite all the European consumer concerns about spending in the past, the money is flowing into new cars again, and particularly into the plug-in hybrids and the fully electric models. Noticeably, we saw German consumers continue to pile into these fully electric vehicles and the various hybrids. So they led the way in that front in terms of unit sales. At the same time, continue to see petrol and diesel sales fall. But when you just look at the car brands as we set up this July sales number, biggest beneficiaries continue to be the VW Group, Renault and BMW, all seeing strong jump in sales, high single digits or low double digits. So it's a really encouraging picture given the struggles we've seen over recent months, particularly the kind of months we've seen over this year. It's been a whipsaw as we've seen new car registrations in July up 5.9%, whilst previous month in July and June was down 5.1%. So it has been quite erratic over the recent months, but at least there has been a real flow on in terms of car spending.
How much are subsidies playing into this bump in electric vehicle sales?
Well, ultimately, car brands are continuing to position towards EVs, and especially as the threat of a ban on combustion engines still looms into the next decade. So you do see the European countries continue to think about reviving subsidies and to try and jumpstart that EV demand. And we've definitely seen the benefits for the likes of UK reintroducing grants for as much as £3,750 to stimulate EV purchases. So they have seen in July a nice bump up in sales. And it is a kind of balancing out for some countries who are still seeing a strain on budgets, frankly, particularly the likes of France. So, yeah, it's that subsidies which are helping drive up sales for sure.
Okay, well, how fragile, though, are European car manufacturers? I mean, surely they'll take this as good news, but the upheaval of US tariffs has been enormous.
Yeah, Europe's car makers are really facing a delicate balancing act with the tariffs, and especially when you think about their sales in a major market like the US, where they continue to still import from Europe and also produce in America. It's the delicate balancing act, and as a reminder, Europe's auto majors had downgraded their full-year earnings outlook not too long ago. Because of the back of the higher tariffs. But the bloc is trying to lower tariffs on imports. Brussels is seeking to fast-track legislation to remove all tariffs on US industrial goods, and maybe that could help EU car duties, which for now have a 27.5% tariff level.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.